On this 1000th subscriber episode of Black Investments Matter, the Ujamaa Network, we're going to be talking about wealth killers. These are the times that we live in right now. We call it the 50-50 economy. Why? We're going to get into all of that right here, right now on the Ujamaa Network. Thank you for subscribing and liking. There are four major factors that are really killing the economy right now. One being the high cost of everything with inflation. The other being record layoffs, especially in the tech industry. We have auto repossessions and the housing crisis. People simply cannot afford the roofs over their heads. And how that is impacting the African American community, particularly African American women, uniquely, is what we're going to get into right now. I'm going to direct your attention to the Zillow website that I'm going to link at the bottom of this page and in the comment section. And I want to show you what it takes right now to rent across America. Zillow has a nice U.S. rental market app or web page that's going to show you what the national average is for the U.S. market and your particular area. You can go through many areas and it'll show you based on what your bedroom size is, either 1, 2 studio, up to a 4+ bedroom apartment, and what type of home you're looking at, whether it's a house, single family, townhouse, apartments, condo. But the average price right now for US for a 2-bedroom apartment is $1,900. Now in Atlanta, it's over $2,100. And in some areas, it is $2,800. This is throughout the city. If you are seriously trying to afford an apartment in Atlanta right now, this is probably the worst time to do it. It actually was a little bit worse last year. People are finding themselves out on the street because they cannot keep up with these payments. In order for you to be able to afford a $2,100 apartment comfortably in this city, you have to make 3 times that amount for your down payment. That's what they're asking down here, 3 to 4 times for your deposit. In other words, your income has to be $6,000 a month. Not too many jobs down here do this, especially within the service industry. But even if you are making $6,000 a month, is that really where you want to be? We want to talk about the debt to income ratio calculations right now and let you know exactly why this is a recipe for failure. Now, in our previous video, we did a race and gender evaluation between the races and what the wealth gap is or the income gap is between men and women for each of the racial demographics. What we found is that those numbers are in line with divorce rates, meaning that there are more single family households based on the amount of parity there is in the particular racial demographic. Those racial demographics with higher wage gaps between men and women are the least divorced. The ones with the lowest gap, the African American community, have the highest divorce if they're getting married at all. Many of the households, 75% of them by last census count, are single parent households, meaning that a lot of women are running their households and have been doing so since the mid 70s. Now the problem with that is that in these type of economies, things are going to get a lot harder with one income versus two. Now, you can say what you will about the current climate and the red pill or manosphere if you want, but one thing isn't going to trip you up, and that's numbers. If you are faced with $6,000 down payment to get a home or an apartment, that's just your deposit. How are you going to make it if your income is at $49,000? That is the average. Remember, at $49,000, your debt to income ratio does not afford for anything else. You can't live here and expect to get a loan here with just that income. We're going to demonstrate that with this Wells Fargo debt to income calculator. And it's just going to spell it out for you in simple terms. Just look at the $49,000 that we're going to put in as your income And without using the utilities or any other bills that you're going to be faced with, let's just see what that does to your debt to income ratio. Now, with those sobering numbers in mind, we're going to keep our laser focus on the African American community. Although the African American community makes up 27% of the rental market, we account for 40% of the evictions. And overall, among all races, women make up 59% of all evictions. Women make up 59% of all evictions. That means that men make up 41% of the evictions. These disparities cannot only be measured in gender. You're looking at a disproportionate number of women who are heading their households and are facing more evictions. Currently, that 59% is overwhelmingly African American and Latino who are being evicted from their apartments because they are the single breadwinner in those apartments. This is where that red pill conversation starts to come in, and you are still doing bad by yourself. And why there is such a disconnect, and why are African American men less likely, at least in this instance, to be evicted from their homes? Maybe it's because they don't have the responsibilities. They're only paying their child support. If they are dads, some of them are just single, 49%, as the late Kevin Samuels used to say on this podcast a lot. Most black men don't even have kids. So, 49% anyway. Half of black men don't have kids, so they don't have the responsibilities. So it kind of paints a picture that if you look at these numbers, it just says that you can do better with two incomes versus one. Now, you can take that information how you want it, but numbers, again, just don't lie. Now, briefly doubling back on that debt to income ratio calculation, what it shows you is that the average amount of money that we're bringing in, both men and women in the African American community, whether it's $51,000 or $49,000 a year, with a $2,000 or $2,100 a month monthly expenditure in the form of rent, your debt to income ratio is 51%. That is 20%, actually about 18% higher than it should be for a favorable ratio to achieve or receive a loan. You can't get loans over 36%. They want you at 36% debt to income ratio to afford things like cars or credit cards. If your income is tied up in just your monthly living expenses, that leaves little wiggle room for anything else. And this is why those auto loans are now being a drag on the economy, because there's so many repos going on. The latest numbers are not as bad as they were, but it's coming to a head. They're seeing stockpiles of inventory of vehicles just not going anywhere because people just cannot afford them. And the last thing we're going to be talking about is the other big threat: layoffs. The tech industry by far is leading the way when it comes to layoffs right now. And these are the same areas, these high paying jobs where people are coming in making those $6,000 and $7,000 a month to afford that $2,000 and $3,000 apartment. This is why so many of those apartments are on the market right now, as these numbers from these small companies and big ones, people who are employed by Tesla, people who are employed by Google, massive layoffs, entire segments of those operations are being shuttered. And it's causing a ripple effect when it comes to available housing, being able to afford those houses, apartments, loans. You got to redo everything. Those high paying jobs are not coming back. And if you are able to find a job in the industry, what form will it take? From an economic standpoint, I don't know what you do outside of tech that's going to generate $50,000, $60,000 start for a beginner. And it's one of those industries where it had been a staple for a while, but as automation continues to take its pound of flesh out of the American labor force, we're going to see a lot more of this to come. What that does to the future of, our community, particularly with African American women who have made great strides in the tech industry in recent years. You're getting laid off just like men were, and in some cases even more so. I would be interested to see what those numbers look like. Is it disproportionately being females suffering the brunt of those tech layoffs? Pretty interesting. I've been seeing a lot of clips around the internet on TikTok and whatnot. People recording their televised or their Zoom meeting termination notices. It's not funny. I'm not laughing, but wow, man, you are really making it pretty easy not to get hired by putting that on TikTok. So, hey, remember, these things can come back to haunt you. Let me know what you think in the comment section below. I would love to hear from you. Thank you for rocking with us for this far. We are at 1,000 subscribers. Get these video hours up, the watched hours up, engage, talk, and I will talk to you very, very soon.